Hello and welcome to the video. Today I'll be talking about semiconductor stocks and figuring out which ones are overvalued or undervalued. Let's get right into it. The first stock I want to talk about is Broadcom, ticker symbol AVGO. Broadcom merged with AVGO Technologies in January 2016. The company is a designer, developer, manufacturer, and supplier of a wide range of semiconductors and software products. Broadcom's product offerings serve the data center, storage, networking, software, broadband, wireless, and industrial markets. Broadcom stock is currently trading at $498.50. The stock is up 105% in the past 5 years. It's trading at a PE ratio of 24.78 and a price to sales ratio of 7.82. Broadcom currently has a market cap of $202 billion and offers a dividend of 3.28% per share. Broadcom stock is down about 26% from its all-time high in 2021. Broadcom's revenue has been increasing each year for many years, while its net income fluctuates. Let's dive into this company's most recent earnings report. Broadcom's revenue is up 22.59% year over year, its net income is up 73.48%, and its EPS or earnings per share is up 37.01%. I believe this stock is a great one to add to a long-term growth portfolio because I believe it will continue to grow naturally and through acquisitions. The next stock is actually one of the semiconductor stocks that I personally own. It's also one of the larger positions in my portfolio. This stock is none other than Qualcomm, ticker symbol QCOM. Qualcomm develops and commercializes foundational technologies for the wireless industry. These technologies include semiconductors, software, and other services related to the wireless technology industry. It owns patents critical to the 5G, 4G, CDMA 2000, TD-SCDMA, and WCDMA mobile communication standards. Qualcomm stock is currently trading at $128.50. The stock is up nearly 159% in the past 5 years. It's trading at a PE ratio of 11.38 and a price to sales ratio of 4.398. Broadcom currently has a market cap of $144.28 billion and offers a dividend of 2.33% per share. Qualcomm stock is down about 32% from its all-time high in 2021. In 2018, Qualcomm's net income went negative because of its legal issues with Apple, but recovered quickly the next year. Their revenue dipped year over year in 2020 from 2019, but its net income actually increased. In 2021, both revenue and net income increased significantly. Let's get into this company's most recent earnings report. Qualcomm's revenue is up 35.68% year over year. Its net income is up 84.02% and its EPS is up 54.17%. It's obvious I believe this stock is a great long-term growth stock, and again, I do own this one personally. I believe this company will continue to grow and continue to be one of the leaders in this space. The next stock on this list is Intel, ticker symbol INTC. Intel is the biggest American semiconductor company in terms of revenue, but only number 7 in terms of market cap. Intel is also number 2 in the entire world in terms of revenue after Samsung, which is not traded on the US stock market as of today. Intel is number 9 in the world in terms of market cap. Intel stock is currently trading at $31.23. The stock is down 11.28% in the past 5 years. It's trading at a very low PE ratio of 6.69 and a price to sales ratio of 1.616. Intel currently has a market cap of $128.19 billion and offers a huge dividend of 4.68% per share. Intel stock is down 54.4% from its all-time highs in 2020 and actually got right back up to that range in 2021 before another massive 54% dip to where it stands now. Intel's annual net income has fluctuated slightly, but their annual revenue has been increasing pretty consistently. Keep in mind, in 2022, you may see a decrease in overall revenue and most likely a significant decrease in net income based on their last 2 earnings reports and guidance. Now let's get into this company's most recent earnings report. Intel's revenue is down 21.96% year over year. Its net income was also down significantly and actually went negative this last quarter, as you can see in the image on the right. Their earnings per share is also down 77.34%. I believe Intel along with Qualcomm and Broadcom are some of the best semiconductor stocks for income, but Qualcomm and Broadcom also give you more potential for growth in exchange for less dividend income. If you want a pure play, slower moving income stock, Intel is a great choice for long-term income at these levels. Intel shows no signs of removing or decreasing its dividend, and as the stock depreciates, its dividend will increase. So you may want to wait a little to see if this one can go lower. Although Intel is a leader in its space, it's obvious they've been struggling with dealing from increased competition, especially from our next two stocks on this list, and especially from our next one, AMD. So of course the next stock on this list is none other than Advanced Micro Devices, ticker symbol AMD. AMD develops computer processors and related technologies for business and consumer markets. They initially manufactured their own processors, but later outsourced their manufacturing, a practice known as going fabless, after Global Foundries was spun off in 2009. AMD's main products include microprocessors, motherboard chipsets, embedded processors, graphics processors, and FPGAs for servers, workstations, personal computers, and embedded system applications. AMD stock is currently trading at $80.24. The stock is up a whopping 555% in the past 5 years. It's currently trading at a PE ratio of 33.74 and a price to sales ratio of 6. AMD currently has a market cap of $129.53 billion, slightly more than our previously mentioned stock Intel, but offers no dividend. This can be seen as a positive for some growth investors since they have no obligation to pay out shareholders and can focus on reinvesting into their business and buying back shares. AMD stock is down about 49% from its all-time highs in 2021. AMD has seen some significant increases in revenue in the past few years thanks to their new chip offerings and advancements in the space. Their annual net income has been increasing each year along with its revenue. Let's dive into this company's most recent earnings report. AMD's revenue is up 70.13% year over year. Its net income has actually gone down 37.04% year over year, but its EPS is up 66.67%. Although it has been a victim of the flight in tech stocks recently, and specifically chip stocks, this business still has a major positive sentiment amongst growth investors and a cult-like backing. I also believe this company will continue to grow massively and continue to be one of the leaders in its space. This is a stock I've made money trading in the past, and I am considering buying this stock again at these levels. The next stock on this list is a major one and probably the most talked about chip company in recent years. You've probably already guessed it. This stock is none other than ticker symbol NVDA or Nvidia. Nvidia is a software company that designs graphics, processing units, and application programming interfaces for data science and high-performance computing, as well as chip units for the mobile computing and automotive market. Nvidia is a global leader in artificial intelligence hardware and software. Its professional line of GPUs are used in workstations for applications in fields such as architecture, engineering, construction, media, automotive, scientific research, and manufacturing design. In addition to GPU manufacturing, Nvidia provides an API called CUDA that allows the creation of massively parallel programs which utilize GPUs. They are developed in supercomputing sites around the world. More recently, it has moved into the mobile computing market, where it provides Tegra mobile processors for smartphones and tablets, as well as vehicle navigation and entertainment systems. Unfortunately, Nvidia has been taking the brunt of the recent negative sentiment in semiconductor stocks, and has experienced many instances of bad news, bringing the stock down by double-digit percentages in a single day. Nvidia is currently trading at $136.76, and honestly looks like it still hasn't found a support and may dip even lower. The stock is up a whopping 233.50% in the past 5 years. It's currently trading at a PE ratio of 44.75 and a price to sales ratio of 12.85. Nvidia currently has a market cap of $341.18 billion and offers a very small dividend of 0.12%. Nvidia has also seen some significant increases in revenue in the past few years thanks to their advancements in the chip space and an increase in gaming and mining. This factors into their future guidance as well, since these two industries have seemed to cool down, and especially given the negative sentiment in crypto mining and questions of if that sector will continue to grow in future years at all. Now let's dive into this company's most recent earnings report. Nvidia's revenue is up only 3.03% year over year. Its net income has gone down significantly, 72.37% year over year, and its EPS is down 50.96%. Although it's missing from the chart, in May 2022, their net income was $1.62 billion. For some reason, Google Finance has been missing some financial info recently, so make sure to use multiple sources. This is actually really important because it means their net income has decreased for 2 quarters straight now. Their guidance has also been pretty negative. Even with all the recent negativity, I do believe Nvidia is a great long-term company, and it still does have a lot of positive sentiment amongst a lot of hedge funds and across the stock market in general. I would personally wait to see some positive movement in this stock and maybe even wait until after their next earnings to make a move. That's all for part 1 of this series. Thank you for watching, and please remember to do your own due diligence and research. If you like this video, please hit the like button and make sure to subscribe. There will be 5 more parts to this series where we talk about more stocks to look at, ETFs to buy, and which stocks or ETFs I have in my own portfolio. If this series interests you or stocks in general, make sure to not only subscribe but hit the bell. Have a great day and see you on the next video.